We are entering the final part of the year now, and I think we've hit the point where volumes will start to drop off, and the holiday season will kick off. And as we've kind of gone through for the last month, and as you guys have read about, there's going to be just a seasonal bias to things grinding higher. We've made it through earnings. We've made it through the economic data for the month for November, and we'll start to head into just a period of time where, other than the potential for the Fed to cut rates, not cut rates, there really won't be anything that, in my opinion, is too big other than an unexpected shock. So today I'm going to spend some time. We're starting to get the 2025 outlook time. I think the most interesting thing about this is the fact that there's really no mention at all for Bitcoin. So as you're getting these major runs in an asset that's at $2 trillion, I will go through at the very end just kind of what this means. But I think in general, when you're reading the outlooks, they're focused a lot on things that I think are just not going to have a lot of volatility this year, and I don't think they're hitting on the points necessarily that are going to make you money. I think a recession is highly unlikely again because of the fact that we have strong growth and because we have a president coming in which is emphasizing domestic growth. And I'm going to go through in here deregulation, Doge, Javier, Milei, who visited Trump. We started to get an important inflection point, I think, that was confirmed with AI agents now being the dominant theme for AI next year rather than the LLMs and Capex. I'll go through that, and then we'll obviously spend some time on crypto just because it was another big week for Bitcoin. So, like I said, they're starting to roll out. The S&P is now up 4.6% month to date, very close to the best month of the year, just continuing to move higher and sitting near all-time highs. IWM, the Russell 2000, still has not broken out yet, but month to date now it's up 9.4%. And I do think this small cap trade, maybe it'll turn into something bigger, but at this point it is a trade. I think it's going to continue, and I'm going to go through some of the reasons why as we get into the economic data. In terms of the Trump trades, the ones that have gone through, I've highlighted these, but I put them all in one just to highlight. You've got the white line here, the power. This is the Goldman Sachs power customized basket. They created the U.S. cyclicals versus defense still sitting up here. The onshoring still sitting up here. Deregulation broke out again, so the green thing. So deregulation, the whole Doge theme is important. The red line here is Bitcoin. And then the Russell 2000, you did have the correction to give up a lot of the gains as this underperforming trend. I think people jumped on it saying nothing really changed, but now we've had a quick move back higher, which I think is very, very bullish for IWM until we see people start to embrace some sort of the story on this. The dollar, again, showing the domestic story for Trump, eighth week in a row of strength in the dollar. It's had a very, very large move. You're at the point now where if it doesn't reverse, you're going to start hearing people talk about the impact that a stronger dollar has on the multinationals, which again will be positive for small caps and less positive for large multinationals. An interesting thing, we're almost back to inversion again. So everyone that was thought the best trade if Trump won to short 10-year notes and play for yields to go higher on the back of out of control spending and inflation. We're just not there yet. So what's happened is 2-year rates have taken out Fed cuts, and we've seen the curve head back to a point where it's now flat again. So steepening has not worked out. And to just emphasize that this is a pro-growth trade, you've got the correlation between stocks and bonds. So yeah, bonds have sold off, but it's happened at the same time that stocks have gone higher. You've had this negative correlation. So this has been a growth trade. And in the economic data we saw this week, I think the most important thing, this is the Philly Fed. Overlaid, the white line here is the ISM. So if you've got the ISM, down near the lows, of the last 15 years. This green bar here is the increase that happened. It jumped up significantly, 44 points, and this is the Philly Fed outlook for new orders 6 months ahead. So the sentiment for the future has improved on the Philly Fed, and you saw a similar story in the PMIs that came out, the S&P US PMIs that were released on Friday. You had a significant jump in the business activity, so the manufacturing to a 31-month high. In terms of, here it is, the improvement in sentiment was broad-based, but especially notable in where optimism struck a 31-month high. And again, this was on the future of new orders. So you're just getting a point where people are expecting things to get better. Businesses across the board are expecting less regulation and a more friendly government towards getting things done. Whether or not it translates into the monthly numbers, it has historically, so I would be surprised if it didn't, but I think people are getting more optimistic. There was also a mention in there that orders are likely to pick up ahead of the tariffs. So you could see a boost, even if it doesn't last for the long term, just in anticipation. So I do think the economic data side for the PMIs, which again translates more to a domestic thing, would be good for small caps. So just keep that in mind. And when we get to 10-year notes, I just wanted to bring this up because I'm going to keep saying it until you see a change. This is the overlay. The white line there is gas at the pump, which continued to move lower. We're basically down to 305 now. And the orange line here is 10-year rates. So yeah, we did have a move higher. Everyone got excited. It's 70 some odd 80 base point move I mentioned last week. I don't think that's going to be enough to stop anything in the stock market. If this is going to have a sharp move higher, it's going to need inflation to trade higher. And we're not going to see inflation go higher unless we start to see a change in gas at the pump. Gas at the pump is very important to the sentiment on inflation. And as you can see here, it led on the way down. It coincided on the way up. It led on the way down. And then you had this break at the time that the Fed decided to cut rates, and inflation expectations have clearly jumped. I think at this point, until gas changes, you're just not going to have a sustainable move in 10-year rates higher, much higher than we've already gone. I highlight this. I sent this tweet out this week. This interview is very important from my perspective for people to start thinking about what Doge means in the U.S. and what they might expect. Javier Milei has gotten a lot of press since his speech in Davos. He gave gave an interview about 2 hours with Lex Fridman this week. It's worth watching. This is you can see it on YouTube. I think he released it also on his podcast. But Javier Milei has had a lot of press for him since his speech at Davos. He's a libertarian. He spoke a lot about big government and just tearing it down. Having lived in Brazil, knowing a lot of the positives, not just of Brazil, but Argentina, because of the resources, because of the intelligence and trading from commodities over the years. I've known a lot of people down there. And anything that can change is important. And he's having an impact down in Argentina. And if you remember, Druckenmiller was quoted as saying that after he heard the speech, he immediately went out and bought some ADRs in Argentina. And this becomes important for us in terms of thinking about what the U.S. is going to go through the next 4 years. Aside from things like tax cuts, hearing about deregulation, if you listen to the Milei speech, he has been insanely aggressive on trying to tame inflation and doing that by getting rid of government agencies. And hearing how he did it and going through it, this has been something that he has talked about with Elon Musk and Donald Trump for some time. This is not a news story, and he basically said on this interview that Musk and Trump will replicate the Argentina model. To what degree, we don't know, but I think it's important as you're looking at the cabinet posts and just the things that are coming out, what's happening. And these news headlines just show that he was the first foreign leader to visit Trump. He spent time in Mar-a-Lago. They talked about Doge and what they were going to do. And you can just see that his model in there has been called chainsawing, which is just going through and getting rid of agencies and expenses and corruption and everything in Argentina. And I think this theme of big government is something that, reducing big government is what we have to think about when it comes to markets. A good friend of mine, Marco Papich, and I spoke about this. And sometimes what happens in markets is you get this impact coming from forces that are coming together. And when Trump took over the first time, we were coming out of a period of austerity where we had been trying to deal with the crisis of 2008. And then we went into a spending and what has become fiscal dominance. Well, now we're shifting back towards a period where the government spending and everything has to come under control, and we're trying to figure out ways to do it. It comes at a time when AI is accelerating, which helps the ability to get things more efficient. But it also comes at a time when Bitcoin is rising, and this is a big theme also in Argentina. So just remember that when you're reading about Bitcoin and going through it, a lot of people are doubting it. It fits in the construct of deregulation and decentralization, and I think that's going to be a theme that you're going to hear a lot about over the 4 years of Trump. So just more stuff on Milei and what Vivek and Elon will be in charge of. This just shows that this started a while ago. In April of this year, as the Milei went to go visit Musk. And then this week, Elon Musk and Vivek released an op-ed where you can go through and just see more and more details on this as it's coming out. So I think when Doge was originally out there, it was kind of laughed at because of Dogecoin, but the reality is the Department of Government Efficiency and mass deregulation is going to be a theme, and it's being emphasized consistently. But I think one of the reasons to take it seriously is what has happened in Argentina, which doesn't get a lot of press. So this week, JP Morgan took their GDP forecast up to 8.5% for next year. So you're talking about on the GDP level, it's been a success at this point. At the same time, this is the ETF. So last year, their ETF was the best performing single country ETF in the world in 2023. And so far this year, it's going parabolic. So it's moving even faster this year. So on the ETF side, Argentina, on the equity front, is doing well. On the bond side, you've seen just a dramatic tightening of risks there in terms of spreads. So they're meeting with the IMF now, but they've been getting things under control. Their rates have come down. It's one of the reasons why, if you're thinking about in the U.S. playing for rates to get higher, if there's any chance of them doing anything, and again, the U.S. has a very different situation than Argentina. Our rates arguably are lower than they should be, while Argentina's were up at high levels that needed to come down. But the reality is the cuts that he's done have had an impact. And you can see here that on our bonds right now, this is a range over the last year. Our bonds are at the highest of the last year. That's what the blue dot says. This is the average for the year. And then Argentina is one of the few countries that's sitting down at the lowest yields of the year. Argentina has recently proposed a Bitcoin bill for central bank adoption. So this is another reason to pay attention to what's happening in terms of having a government in the U.S. that was voted in the people. And one of the major themes about this is that the government in the country has probably gotten too big and overextended itself in terms of its impact on business, M&A, all the things we've talked about here in terms of the way people are viewing it. But the other thing is that Milei has basically been attacking the central bank, and this is going to be a theme under Trump. We've already seen Powell come out and say he won't agree to step down. So you've got to look again that Milei has had a fight with the central bank in terms of calling it something that's caused a lot of the problems. And there you go, Argentina's central bank shutdown is non-negotiable, says pro-Bitcoin government. And then I showed this recently that they even hosted the central bank a live Bitcoining exhibit inside the central bank. So Milei's impact there should be watched. You should watch the Lex Fridman interview for the full time, because you're listening to someone who's got a very, very good knowledge of economic history. He has an economic background, and what he's doing there seems to be resonating with some of the approaches on the cabinet posts and the things we're hearing. So just something to think about in the U.S. is that Javier Milei's model, to some degree, seems like it's going to be attempted here. In terms of the earnings side, I think it was a big shift this week, and it's really been going on since the summertime. I talked in the summer about having reached a peak euphoria for AI, and on that front, I would say AI on the LLM and the Capex side. So Nvidia came out, good reports. It was a very quiet reaction. Nothing in the report was negative, but I think the most positive thing was them bringing up the fact that the agentic AI movement is starting right now. I've brought this up. AI agents is one of the dominant themes for me for 2025. And here's Gartner, one of the most respected groups in terms of talking about technology and where it's going to be. Their number one theme for this year is agentic AI. This was a big thing at the Cerebral Valley event, and I think if you go and you read some of this, it's really, people are starting to talk about how we're hitting the scaling law debate. We're hitting scaling law, meaning we're reaching a point where there's just not much more we can take the LLMs. You can listen to some of the people, particularly Dario Amodei, who don't agree at all. But regardless of that, this is a sentiment thing out there that exists. In the tweets that I look at for AI and some of the bigger thinkers, the number one thing I hear on the negative side is that we've reached the end of AI, which is just absolutely not true. The benefits are going to start showing up in the market in a broader scale, which means away from the mega cap companies that have been doing all the CapEx. And because of the AI agents, this is going to be a move that is effectively AI robots, which are going to help people on the productivity and efficiency side, because humans have just not been adopting AI as fast as necessary. So in this case, as Mark Benioff has said, you're going to go from a do-it-yourself world to where the AI is going to do it for you. And so they talk about this here, and I think this is going to be a big theme for next year. This is just showing, again, that the growth rate in terms of the earnings forecast has come down. And so to me, you've reached a point where it's not like this is going to be a negative. Nvidia at this point is still going to be growing earnings. It should be fine as a positive. I just think you're through the concentration of AI being limited to the 6 names, and now you're going to have a spread out, which again is another one of these small cap versus large cap. And what you're seeing it is, we had a couple earnings reports where you've started to see some of these companies talk about it. You've got ServiceNow talking about AI agents. You've got Mark Benioff talking about AI agents. In terms of Benioff and CRM, you can see that once he started this, I talked about this, him being on the all-in pod back here, you started to get a big rally as he talked about 1 billion agents coming. For the ServiceNow group software side, same thing, going sideways for basically most of the year and then all of a sudden going. So as of June, the stock was really unchanged for the year. And then even in here, it wasn't up that much. And now you've seen just consistent movement. This will show up. Morgan Stanley has an index, their AI adoption index, and this gets more into the agent side, the spreading out of it. So again, you can see that this entire time period going sideways and then all of a sudden starting right around the same time as Salesforce.com. And then here's another one. This is the Morgan Stanley Growth Software Index. So you've seen this spread out now where you're starting to get past the point of this just being the CapEx spend. You put all this money into it. Then you go to phase 2, which is the adoption in the AI agent side. So this is going to be a major theme for next year. I think it's going to have a huge impact on the market. And another way to look at this is the Goldman Sachs AI pair, which was the winners versus the losers that they had put out really at the early part of 23, not long after ChatGPT had come out. We had this massive move higher, and look at the Sharpe ratio just during this period. Well, now all of a sudden it's come down and it's having trouble. Now the orange line here is the pure size factor, the Bloomberg pure size factor. So there is a direct relationship between AI, what had been going on, you had been losing and you just wanted to own the mega cap names. Well, now we've seen a shift, and I think this is going to play out some more next year, at least as a trade. So it's another reason to be long small caps versus large caps or mid caps. Probably better in the mid cap side than the small cap side. In terms of other places than the age, I just want to go back to something that came out in January. I've mentioned this before, but AI agents will be, I won't even say could be, are going to be an important part of accelerating crypto innovation. It's just a big thing to have the robots going through. You're going to try to reduce costs on this side, and I've talked about stable coins on this front. This is an accelerator for the innovation adoption side of crypto. So you're going to have the agents coming at the same time that the deregulation is coming, and you have a pro crypto government. This is the most explosive time, in my opinion. This is very similar to the iPhone moment for software. This is what this is for crypto for me. I've talked about it, that the purest trade for Bitcoin, which is the ecosystem of crypto, is AI. So it's the purest AI trade that you have. AI agents can help crypto become the currency of AI. And then I mentioned Stripe's purchase of Bridge. They released this week. This is just going to be something you're going to read more and more about as we go forward, which is how AI agents are going to accelerate everything on the customer service side and make it a more seamless transaction to go through. And over the course of the next 5 years, this is going to accelerate. Just to finish up on Bitcoin, it was obviously a big week. First of all, the Gary Gensler announced he will be resigning. The second that happened, you had regulatory filings flood in for the Solana ETFs, which we're waiting on the sidelines at this point. Very important. Didn't get a lot of press. The Wall Street Journal just put a little thing out on it, but Trump was set up to meet with Brian Armstrong, the CEO of Coinbase. If you're doing research on crypto to get a better understanding of it, Brian Armstrong is a great person to listen to, in my opinion. Very level-headed, very smart, but has talked a ton about the importance of the industry from an innovation perspective. And I think that's why this is really important. Is Coinbase and Brian Armstrong may not be known by people at this point, but in my opinion, they will be. And obviously, as they're going through the cabinet picks, pro-crypto hedge fund exec Scott Bessent was tapped for the Treasury Secretary role over the weekend. I just want to release, this is something that he said during the summertime on Fox News. Crypto is about freedom, and the crypto economy is here to stay. If you go read his quotes on crypto and the importance of it, this is a line here that is very similar again to things Javier Milei has said. So you have to remember that when you're thinking about crypto and you're seeing what's going on, I really view this as a release where we got rid of the people that were slowing it down, not wanting it to go anywhere, and now you have people that are going to be accelerating it at a time when AI is going to accelerate it. And that's why I said in my conversation with Marco Papich, you're just getting a point where government decentralization and deregulation is a major theme. And how do you make money off it? Well, here's what you got. You have Bitcoin breaking out, and I want to show this as a breakout for two reasons. One is, yeah, it's been an explosive 3 weeks, but we just spent the better part of 7 months going sideways in a beautiful consolidation. But also, we were effectively unchanged for 3 years. So this is a breakout. This is not, as people are calling it, a bubble. And that's why, as people have called me and said, is it too late to get in? It is not too late to get in. One thing I've learned over the course of trading markets, and this is where I became more interested in Bitcoin back in here, and then especially in here, you can't have four bubbles. When you have four bubbles, that's what the S&P 500 is. And that's why I keep saying Bitcoin is not a bubble. It's not something to ignore. Tulips were a bubble. They went up once and then you never saw them again. Bubbles end with a crash and then they're gone. You've played with them with your kids. They don't go higher and then make new highs again and get to $2 trillion. And I would assume by the end of next year or the year after, they will be the second biggest asset in the world behind gold. So I just I don't see that there. And then the other thing is when we did have a bubble where NFTs and people, all these meme coins were all out there. Well, this is the XAI, which is the altcoin index. We haven't moved yet. And this chart, for those of you who've got a good pattern recognition skill, this looks exactly to me like the NASDAQ bubble in 2000. We still have not taken out the highs. The NASDAQ bubble, believe it or not, from 2000 took about 12, 13 years, I think, to reach highs. Everything in crypto moves at about 1/3 the time period. That's what I've seen as go through it. That's the way I think of AI and crypto is it just goes much, much faster. And so I think in this case, it'll take probably another year or two before this gets back up to the all-time highs. But I do think you're going to get an altcoin movement. The market cap did go. So this shows the ecosystem is still growing. So the altcoins having gone in, but this has been led by Bitcoin. This has not been led by that. And for people having trouble with it at 100,000, I just want to show you a stock of something that was 100,000 back in 2011 and is currently 700,000. And just to show where you can have it, this is the chart of Berkshire Hathaway. So it took Berkshire, just to go back to it, 13 years to go from 100,000 to 700,000. Bitcoin's at 100,000 for those of you who, are still not in it or considering to go into it. Like I said, I think Bitcoin moves at a speed of the stock market it takes about 1/3 the time. So if it took 13 years for this to go, my projection would be that we would see 700,000 sometime during the Trump administration. So that's all for me this week. Everyone have a great Thanksgiving, and maybe I'll do a quick one next week if there's anything in the market. If not, I'll see you the week after.